Welcome back to another episode of Palisade Radio. I'm your host, Karema Mutlu, and on today's show, we welcome back Jordan Trimble, who's the CEO of Sky Harbor Resources. How are you today, Jordan?
I'm good. Thanks for having me.
Earlier this year, many investors were looking at the clarification of Section 232 as perhaps one more catalyst to begin a real bull market for uranium. And even though the fundamentals for a bull market are perhaps stronger than ever, the psychology of caution and uncertainty still prevails over the market for the average investor. So talk to us about Section 232 and where that has left the uranium market today in your view. And also talk to us about the recent visit to the WNA Symposium here in London.
Yeah, absolutely. So the 232, as we know it, the decision which came out in July was not what most of the market was expecting, right? It caught a lot of people off guard. A handful of the uranium companies down in the United States, Energy Fuels, the two that led the charge there, petitioning to have a quota imposed on nuclear utilities in the United States, having to buy 25 up to 25% domestically. And the Trump administration, after the Department of Commerce investigation, decided against that there was no need for quotas. Now, there is a 90-day working group. The findings and decisions of that will be made public here in October. But bottom line is the market was expecting the decision to go the other way. And what I mean by that is money that came into the space, in particular into the U.S. equities, over the last year and a half, was expecting, clearly expecting the decision to go in favor of the companies. And what we've, I think, seen happen is this sell-off that has resulted post-232. We saw money come into the space. There's not many companies left in the uranium sector, and that's an important talking point here. The combined market caps of all publicly traded uranium mining companies amount to less than $10 billion. So it's a very small sector. Investors that want exposure to the commodity, to uranium, and to the space only have a few companies to choose from. So as a result of that, money that came in and bid up these U.S. companies also came in and started investing in Canadian companies, Australian companies, non-U.S. companies. We had investors and funds come in to Sky Harbor, and really it was event-driven. This was money that was coming in as a trade. And so when the decision came out, and it was not what people were expecting, and we saw afterwards a lot of this money having to leave the space, and basically that trade, those positions unwinding. So it's been an interesting few months. Needless to say, the market's pulled back. We've seen a pretty significant sell-off across the board. But I think it's important to highlight here that fundamentally, really with this decision on 232, fundamentally the space is stronger now than it was. This decision prevents 10 to 12 million pounds coming online potentially down in the U.S. If we saw the decision go in favor of 232 and a quota system imposed, we would have over time likely seen much more production out of the U.S., and that would have meant more supply, and that would have put pressure on the price. So actually, in the long run, the big picture, this is a positive for the sector, yet we saw money come out of it. We've seen the companies sell off. So I think it's created a pretty incredible near-term opportunity in that we aren't going to see that extra supply. We've seen the valuations essentially reset across the board. We'll see what comes out of this working group, but I think this is a time right now that investors need to be paying attention to this space just simply because the value proposition is, in my opinion, stronger than ever.
And your experience of the WNA Symposium in London, I understand it was a bit more optimistic down there.
Yeah, it was. And, this just reiterates what I was just talking about. There was, talk on 232 in the decision, but I've gone for several years now, and, this is one of the marquee events for the nuclear industry and the uranium mining industry as well. And one of the big takeaways here was the new fuel report that came out. So the WNA does every 2 years a nuclear fuel report. They talk about the supply side, the demand side, nuclear power generation globally. And this was, I'd say, the key takeaway was this report was, for the first time in a long time, quite bullish for the mining companies. So to start, we saw demand projections up in all scenarios, the upper and the mid case in increasing demand. We've seen that in previous years. But in the lower case, we've also now seen an adjustment upwards, which is, I believe, the first time that this fuel report, we've seen that increasing demand in the lower case since Fukushima. Secondly, on the supply side, look, we know there's been a number of notable supply cuts over the last couple of years, the supply side finally responding to the low price environment. McArthur River in the Athabasca Basin, largest uranium mine in the world, being idled. Kazakhstan announcing production cuts and other production cuts globally. One of the issues is that the WNA cannot speculate or factor in uranium price and mining costs when they project the supply side. So needless to say, that skews the numbers. There's a lot of development projects out there that are incorporated in these supply projections, despite the fact that they're never going to see the light of day unless you see a much higher uranium price. So they finally address that. They still can't comment or factor in price and cost, but they've now shown idled capacity. Again, we talk about these supply curtailments, and they also talk about unspecified sources of supply that are needed to fill this and it's quite substantial, this increasing supply deficit that they're projecting going into the 2020s. So the nuclear fuel report was, I'd say, one of the key takeaways, very bullish, in my opinion, for the mining companies and equity investors going forward. And also when we look at what's happened over the last couple of years, again, with these supply cuts. One of the big things a year ago at this conference was Cameco. It was around this time where Cameco finally came into the spot market, having shut down McArthur River. They bought in the spot market last year. They were the ones that really drove the spot price a year ago from the low 20s to the high 20s. And I think this is an important talking point right now. Cameco, having shut down production, has to buy material in the spot market and elsewhere to meet their deliveries. Well, they've been somewhat dormant up until recently in the market for various reasons. 232 had played a role there. Also, there was some things happening that they weren't happy about. They didn't want to be the buyer of last resort, as they stated, so they kind of stepped out of the market. They weren't bidding it up. However, we know based off of their deliveries, they have to acquire a lot of material between now and early next year, upwards of 12 million pounds. So we could see in the near term, I think, one of the bigger catalysts we've seen in the last few years in terms of spot price appreciation, and that's Cameco coming into the market, but also getting back to one of the key themes that we've talked about over the last several years is a new contracting cycle. We've still seen a relatively dormant utility contracting market. We know these contracts are rolling off. We know they're expiring. We know there's a lot of uncovered requirements out there. And I believe you'll see, given that the spot price is still in the mid-20s, it's still relatively low, I think you'll see these initial few utilities, when they do come back to the market, they'll come back and they'll start buying in the spot market. And that's, I think, what Cameco's looking for as well. As they said, they don't want to be the buyer of last resort. They want to see other buyers in the market with them. And I think this could be a bit of a double whammy, if you will, where you see two major buyers, utilities and Cameco, in the market over the next 6 to 12 months. So, we're excited. The prospect of that, as we've seen in the past over the last several years, again, take just a year ago today, where we saw a pretty healthy rally in the spot price and in the uranium equities. We were hitting a 52-week high, as were many other companies. So, getting back to where we're at today, I think the value proposition's very, very strong right now, given that everything's pulled back and that we have some notable near-term catalysts potentially in the spot market to drive a higher spot price.
Excellent. Okay, let's move on and talk about some mining jurisdictions. Your company is based in the Athabasca Basin, which is considered the Saudi Arabia of uranium. So as an investor, Jordan, is jurisdiction perhaps the most important aspect when searching for a commodity like uranium? And talk to us about the lessons that you've learned throughout this bear period for uranium as a CEO.
Jurisdiction is a key component to success. We at Sky Harbor, when we initially founded the company and started acquiring uranium projects back in 2013 and 2014, that was a key ingredient for us, was making sure that we were in a good jurisdiction, a good geopolitical jurisdiction, but more importantly and specifically for uranium, the Athabasca Basin is the highest grade depository of uranium in the world. You have deposit grades that are 10 to 20 times the average grade. We talk about this a lot, right? It being really the Saudi Arabia, if you will, of uranium. It's really the only place right now that you want to be exploring for and developing uranium projects. And, that's an important part here as well for us, for our story and our investors, is that we are an exploration and early stage development company. So we're out there looking for that next high grade deposit. We're out there looking to delineate high grade uranium resources. And even in a difficult uranium market, you can still create a lot of shareholder value and see price appreciation on the back of high grade discoveries. And a couple of notable companies like NextGen, like Fission, recently like Hathor, even in a tough uranium market, have shown that high-grade discoveries and deposits still yield significant shareholder value and creation, even in a low-price environment. So that's something that we like to emphasize in the Athabasca Basin. It's really the only place in the world that you can do that. Going through the last, in particular, few years where I think we have seen a bottom put in place, talk about 3 years ago in late 2016 when we saw the uranium price down at $17.75. It would happen to be one of the lowest prices it's traded at in inflation-adjusted terms ever. I think that was the capitulation, the price bottom. We have seen it. We've seen volatility since then, but we have seen, I think, a trend reversal. And it takes time, right? I think right now what we're seeing is some consolidation. It's still, in the mid-20s. We're still well below the average global cost of production. We're still well below the price needed to incentivize new builds. But one of the things that we've looked at and we've executed on over the last 5.5, 6 years is when you're in these kinds of markets, when you're in a difficult bear market as we have been, that's where you get the best opportunities. That's where you have the ability to go out there, be opportunistic, and take advantage of the market that offers these projects that you can buy really at pennies on the dollar. So I think you will see a re-rating as we do come into the next uranium bull market. Given we're still in a difficult market, there's still opportunity out there.
Okay, well, let's move on and talk about a few key books that have helped shape your thinking within the resource space. And are there any books that have helped your understanding in how the psychology of markets work, Jordan?
Yeah, there's a couple of good books that specifically for our industry that I'd recommend. No Guts, No Glory by Lundin, Never Rest on Your Oars, Building a Mining Company by Norman Keevil. More recently, it's not specifically on our industry, but I read a book called Red Notice about Bill Browder in Russia. That one was interesting because, he recognized an opportunity in the East in the late 80s and early 90s, and specifically in Russia, where, he could go in and he could invest in these companies as an activist investor, but, essentially buy these completely undervalued and unloved companies that were trading on the Russian stock exchange, and then you could go and basically get rid of the corruption that was plaguing these companies and see a re-rating and a revaluation of these companies. And he really was a contrarian investor. He went to a place where not a lot of investors wanted to go, and the companies were undervalued, and he placed his bets, and he did quite well doing it. So I think that there's a lot of comparables there to what we're doing now and where we're at in the cycle. I think we've gone through a number of tough years, and there's very few companies left. As I said earlier, the combined market cap of all publicly traded uranium companies less than $10 billion. That's worth noting, because when we do see the cycle turn, and I think it is going to be turning here. I think it has turned. I think, though, we will see over the next little while here a pretty quick move up potentially in the spot price with some of the aforementioned catalysts. Given that there's not many of us left, and given that companies that have stuck it out have been able to consolidate good assets, good management teams, the few remaining companies will benefit.
You are a young CEO within the resource space, Jordan. So talk to us about how you've managed to find backers that have included Marin Katusa and Rick Rule. And I imagine surrounding yourself with those guys must have taught you a few lessons within the nature of contrarian investing. So what have you learned from them?
Yeah, I mean, that's, one of the things in our industry is, it's vital to surround yourself with good people, both shareholders and backers, as you mentioned there, but also management team, board of directors, technical team. We've over a while now, we've built and cultivated a following, and we've built a team to run the company both corporately and on the technical side of things. And, that's, as you're well aware, one of the main ingredients for success with these companies. And talking a little bit about, the team that is around me. I started the company about 5.5, 6 years ago, teamed up with my head geologist, Rick Kazmersky, or Radioactive Rick, as we like to call him. He's a 40-year veteran in the Athabasca Basin. He was the exploration manager at Cameco for many years, and then he went and built and actually sold his own uranium company called JNR, and he ended up selling it to being acquired by Denison Mines. And it's kind of come full circle, because Denison now is our largest shareholder and a strategic partner of ours. And Dave Cates, who's the president and CEO of Denison Mines, is on our board. So we do have that close working relationship with Denison, and that was Rick's career, and he's been a director and head geologist for Sky Harbor really since day one. Paul Matizik came on as the strategic advisor, shareholder of the company several years ago. I here work with Jim Pettit, the chairman of the company. Previously, we were running Bayfield Ventures, which was a gold company we sold to New Gold. So, it's important to have a good corporate and management team, but also the technical team. I emphasize Rick and my team in Saskatoon. They have focused expertise on high-grade uranium exploration in the Athabasca Basin, and that's important. You need to have a team that knows how to specifically find these kinds of deposits. There's been a lot of headway made in the last, call it, 7 or 8 years, 10 years, call it, in terms of making these new high-grade uranium discoveries. There's a lot more tools at our disposal. If you look at fission, if you look at NextGen, you look at some of these more recent successes, they've gone and looked for deposits in places that were otherwise or previously overlooked, and they've used some new tools and techniques to make these discoveries to lower their discovery cost, right? And that's exactly what we're doing here at Moore Lake and our other projects. And I think that's an important talking point, because previously the model was in the basin, you do some geophysics and then you do a lot of drilling and you hope to find the needle in the haystack with big, deep drill holes. McArthur River being a perfect example of that. You know, it took them over 200 drill holes down to 500 meters to make the discovery. Well, we now have methodologies that allow us to hone in on targets much better. Right now, what we're doing is we're flying geophysical drone surveys that, one, are much less expensive, but two, give us a very specific geophysical signature, allow us to look for targets in what we're looking for right now, which is in the basement, the underlying basement rocks. Just a quick point on that. At our flagship project at Moore Lake, a lot of drilling and high-grade mineralization that's been discovered in the sandstone right at the unconformity. I don't want to get into too much technical lingo, but I think it's important. But the project, because a lot of the work was done 15, 20 years ago, hasn't seen a lot of exploration in the underlying basement rock. And that's where NextGen's discovery, where Fission's discovery and deposits lie. So we have a relatively untested geological setting that we're now going in and we're drilling. And just in the recent drill programs, we've had high-grade results, first few high-grade results in the basement rock. So we're excited to get back there and continue to follow up on that going forward. Now with the uranium market over the next 6 to 12 months, timing-wise, I think we're in a good position.
Excellent. Okay, thank you very much for your time today, Jordan. Much appreciated.
Thanks, Trim.
Think you understand the junior mining sector and you think that the participants in the mining sector, junior mining sector, are good people and kind people, hit the bid.
How violent that term could be, it actually could be quite violent. It could be a rip-your-face-off uranium rally.
And the world is always going to need raw materials. It's going to need copper and gold and nickel and so forth.
Totally destabilized. Hey, Troll, did you hear what's going on in Yemen?